Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Virginia Alzina, Managing Director and Head of Sustainability at EmergeVest. Virginia, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thank you for having me.
You got it. And tell us about EmergeVest and where you fit in the ESG ecosystem.
Yes, EmergeVest, it's a private equity fund that was formed in 2013 and it's headquartered in Hong Kong. It has basically three sectors of financing. One is logistics, the other one is related technology, and the third one is financial systems. I am the managing director and head of sustainability, so I sit in the investment committee and analyze ESG.
Share with us how EmergeVest uses ESG as an investment tool to identify opportunities to drive value creation.
Yes, as I was saying, I sit in the investment committee, so I have prepared a tool that I call the ESG health check, where when I conduct due diligence and analyze companies and deals, I try to identify what are the potential risks of this company in terms of ESG, but as well, what are the opportunities to contribute to sustainability and to the sustainable development goals. So as part of this tool, I analyze what is material for the sector, what is important in terms of regulations. I follow some guidelines, for example, of the UN Principles for Responsible Investments or the IFC performance standards. And in total, after that, the whole analysis, I create a score. This gives me a clear idea of what are the potential areas to invest and to then create value, because it has identifying which are the weaknesses and where we can create value once we invest in the company.
Give us a specific example of a risk and an opportunity that you have identified with the work that you do.
Yes, for example, our flagship portfolio company is EV Cargo, which is one of a company in the logistics and supply chain value. So as you know, it's a company and a sector that is heavily has a lot of emissions. So for that, we have identified, for example, as part of the environment and the potential impacts that we can reduce, we need to reduce decarbonization. If not, the risk is huge. You all know about climate change, and the regulatory is changing very rapidly. Each year at the Conference of the Parties on Climate Change, new regulations emerge, new targets for decarbonization and becoming net zero. So for us, what we have identified is ways to save emissions for ourselves, but also for our clients and our customers. And recently, in 2021, we analyzed all the savings and avoided emissions that we contributed in for ourselves and for our customers. And we managed to identify by doing technology and co-loading containers and using data and technologies to improve better routes and reduce emissions. We managed to save over $10 million in cost, and as well as 153,000 tons of CO2 emissions. So that are concrete examples of how we can add value on ESG. There are also a lot of other areas where we can add value. For example, managing hazardous waste saves on insurance and saves on regulatory fines. There are other opportunities as well of how other ways we can create value with reducing fines and returns on investments, on how specific investments can have paybacks that are quite quite fast usually in this type of sectors.
All right, Virginia, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.